Now welcome the MD and CEO of Indian Bank to talk about how their quarterly performance was. Shantilal Jain on the show with us. Mr. Jain, great to have you in ET now. Your provisioning continues to be elevated in the quarter gone by as well. Tell us what's keeping the provision elevated and how is it that you're guiding for recoveries going forward?
So you see our gross NPA and net NPA has come down, right? So provisioning is basically related to the NPAs number. Our NPA provision has come down substantially, which you can credit cost. The provisioning is higher in the standard assets because of the two reasons. One reason is that we have increased the provision on the restructured book by around 5%, and there are two provisions for as per 7th June circular. But as far as the credit cost is concerned, it has come down substantially.
Right. Your NIMs also saw a steep spike to 3.74% for the quarter. Tell us a little bit about what component of your book is floating, and as deposit rates do go up, where is it that we can expect the NIMs to settle for the full year?
As you know, we are in an increasing interest scenario, right? So RBI has increased the repo rate at various stages by 225 bips. We too have increased our deposit rates. And since our deposit rate has increased, our MCLR has also increased. What happens with the increase in the repo rates, the retail assets interest rate increases. With the increase in the MCLR, the advance rate on loan related to MCLR will increase. Whereas in the deposit, it increases with the lag. 1 point. And second point is that what will happen when the deposit cost will increase, since our MCLR link advance is 56%. So on a pro rata basis, around 14-15% per quarter is coming for repricing, and likewise our deposit too will come for repricing. So based on that, we will be able to maintain that cost due to increase in deposit rate.
Good morning. Now, within the corporate books, where exactly are you seeing growth? Banks have suggested there is strong competition and certain mispricing as well. And, there's been this chatter. Would love to know your views.
Yes, sir. The growth is coming from the NBFC sector. Growth is coming from the PSUs. Growth is coming from the road sector. Growth is coming from the steel, cement. So growth is coming. The point is that the mispricing. You see, our growth in corporate lending is 7% because we continue to remain choosy, and wherever we are getting a better margin, we are going ahead. Whereas the growth in the retail, agri, and MSME, the retail growth is 15%, or agri growth is 15%. Overall, we are growing 13%. This clearly shows that wherever we are having good margin, we are going in corporate.
Something else that we've seen in the earnings, I'm just looking at it right now. Employee-related expenses have surged 9% quarter on quarter. Tell us more about this.
Increase in employee-related cost is in 2 or 3 points. One is that since the wage revision is due from 1st November, so we have made a provision of 75 crore in the wage bill. First point. Second point is that considering the growth in operating profits, we have made a provision for production-linked incentive to be given to our employees, and we have made a provision of 105 crores. So 105 plus 75, 180 crore is on account of these two factors.
So tell us then, Mr. Jain, how quickly are you looking to run down your NPAs going forward? Are you looking to transfer loans to NARCL? And where do you see your NPAs stabilizing?
You see, our net NPAs are coming down quarter on quarter. It is now at 6.53 as a gross, as against 7.3. And our endeavor is to bring it further down. The net NPAs also has come down from 1.5 from last quarter to 1%. Our endeavor is to bring it down further. Our provision coverage ratios has improved to 93%. As far as sale of asset to NARCL is concerned, we are around 20 accounts have been identified to be sold to NARCL. wherein 8 accounts where we have received the bid and the bid is under process of switch challenge. In 8 or 9 accounts, we are expected to receive bid very soon, and 3 accounts, the due diligence is in process. So the work is going on in this NARCL accounts.
And there's been a strong rally in PSU banks. ROAs are expanding. Is there further scope for expansion? Can we expect you to breach 1% in FY24?
The ROAs, you see, our ROAs is improving, right? And ROA has become 0.8%. And the difference between ROA and your operating profit, basically a credit cost is a major factor. When your credit cost, which is around 1.8% today, when your net NPAs come down to 1%, naturally your credit cost cannot be 1.8%. So with the decrease in credit cost, your ROA will increase.
Right, Mr. Jain, great to have you on the show. Thank you so much for taking the time out and joining in. We'll slip into a very quick break.